Let's get this shit started. Don't mind my pink cup. I lost all my water bottles.
What's good, man? Welcome to.
I gotta talk. Okay, so basically, we did I don't know if my mic is alright. Bro, this fucking thing is so shit. Bro, it's like I gotta tighten it more than it's supposed to be tightened, bro. Doesn't make sense. Alright. All right. So yesterday we were looking at breaks of structure, which is, if I can remember it, I mean, we also did well, candlesticks, yeah, we don't really give a flying fuck about that. Trends also, it's really easy, but it's with trends that you sort of start to distinguish breaks of structure. So like let's find one. Market is on right now, I think. Right? Wait, so it was a move up or a move down, then a move down or a move up. Then you can kind of see the break of structure, right? Like this right here. Move down, move up, and spot the that's the low and that's the high. But we're on a 1 minute time frame again, so 15 minutes time frame is a bit better. Like this is a perfect example. That's the high, that's the low. And you only can spot breaks of structure on recent candles. Like you can't go for, say, example, like, oops, you can't go and say, oh, this is the low. If it doesn't break that, it's never gonna change trends. Yesterday he mentioned that it's only like the recent one, so now the low would be this. Or maybe this one. Yeah, this one. I think this would be the low, right? Because you have a move up and a move down. Yeah, this would be the new low. And the new high would be this one. Not this one. Okay. We're good. Now we're in liquidity. Liquidity. Yep.
To boot camp day number 8, I think. And today we're back with another trading video. No discipline, just charts. Okay. And today, we're going to get into really probably the largest topic and the most important topic of my strategy, really, which is liquidity. So with that being said, I think we're going to make this 3 parts, okay? Today, and this is just so you guys can fully understand this shit, because I really want to make sure that you guys completely understand this, okay? So we are going to start off with today just going over what liquidity is and why we want to use it in the market, okay? That's it. Just what it is, why we want to use it, how it makes the markets move.
You can't prevent bad timing,
Bro,
but you can help prevent
there's way
certain
too many ads.
HPV.
I don't understand
That is
how
it.
are
We're not
there
going
so
to
many
talk
fucking
about how to
ads.
spot it. We're not going to talk about any of that parts, okay? Today, and this is just so you guys can fully understand this shit, because I really want to make sure that you guys completely understand this, okay? So we are going to start off with today just going over what liquidity is and why we want to use it in the market, okay? That's it. Just what it is, why we want to use it, how it makes the markets move, and that is it. We're not going to talk about how to spot it. We're not going to talk about any of that, okay? We're not going to talk about how to take a trade off of that. That will be in parts 2 and 3. Okay, today we just need to understand why we are using it, okay? And this is why I really love the strategy that I use, because there's reasoning behind the trades that we're taking instead of, like support and resistance, like, oh, it bounced off a floor, so I'm going to buy and put money at risk. That makes no sense to me whatsoever. That, like, you're that's like guessing for being honest, right? Like, oh, a floor and it broke through the floor and now it is on this, and now it's retesting it as a ceiling. Come on, guys. Like, we want to know actually why price is reacting and why price is moving the way that it is. So that's what we're going to focus on throughout this entire boot camp, so you guys can actually understand why price is moving the way that it is, and then also, right, so we can have a better understanding of the strategy that we're using, right? And that's very important when doing this type of stuff. So not much that's going to be put on the chart today. Mainly just going to be me talking to you. Mainly going to be me saying, hey, this is why we use liquidity. This is what it is, and this is why it moves the market. So with that being said, let's get into it. So what is liquidity and why do we want to use it? So essentially, liquidity is what I would like to call resting orders. And there's multiple different orders that we can consider liquidity as. It can be stop orders, meaning getting people out of a trade. It can also be limit orders, like a buy limit or a sell limit, okay? Meaning when these price targets get hit, it's activating something, okay? It's either taking you out of the market or it's entering you into the market, okay? That's pretty much what liquidity is, right? It's a pool of money, right? And when it's a price point where when that price point gets achieved, people are going to be entering the market and exiting the market, meaning there's a lot of liquidity, there's a lot of money getting cycled through the market. Going to be me saying, hey, this is why we use liquidity, this is what it is, and this is why it moves the market. So with that being said, let's get into it. So what is liquidity and why do we want to use it? So essentially, liquidity is what I would like to call resting orders. And there's multiple different orders that we can consider liquidity as. It can be stop orders, meaning getting people out of a trade. It can also be limit orders, like a buy limit or a sell limit, okay? Meaning when these price targets get hit, it's activating something, okay? It's either taking you out of the market or it's entering you into the market, okay? That's pretty much what liquidity is, right? It's a pool of money, right? And when it's a price point where when that price point gets achieved, people are going to be entering the market and exiting the market, meaning there's a lot of liquidity, there's a lot of money getting cycled through the market during this point in time, okay? So with that being said, all right, why would we want to target these areas? Okay. Also, I feel bad for my gardener because Boogie doesn't have, damn, I feel hella bad. I don't have dog bags for him yet, and bro has to like pick up us. Well, with that in mind, right, and then also understanding that banks, hedge funds, or not hedge funds, banks, institutions, okay, these market movers, right, the people that are actually causing the market to move, they have these massive orders, okay? So think about it, right? Think about a stock exchange. When I buy 1 share of Apple, that means somebody is selling me 1 share of Apple. We don't see it, but back in the day, right, people used to say, I would like 1 share of Apple, and then someone would have to sell that to him, okay, send them the paperwork so he, boom, I have a share of Apple stock, okay? But now with brokerages and exchanges, they pretty much simplify this process and make it way easier, okay? Because now it's all digitalized, you can press a button and instantly get filled, your order gets filled, right? It's all through the exchange, it's all through the brokerage. However, it's still the same concept. So if we want to place a buy order, we need someone to sell it back to us. Luckily, since we're in this digital age, when we just want 1 share of Apple, it's pretty fucking easy for the brokerage or the exchange to be like, oh yeah, we found somebody else who's selling their Apple stock right the fuck now. Or, right, what some of these offshore brokerages do, they'll pretty much trade against you, okay? That's what booking a trader means, and we won't get too deep into this, but essentially if you press buy, the broker is pretty much taking a sell order by assuming, so they're filling the order for you and pretty much assuming that you are going to lose the trade because 98% of traders fail. But anyways, once we understand that there's an exchange, right, and we have to exchange these in order for our orders to be filled, now going back to these banks and the market movers, how are they going to get their massive orders filled, right? How are they going to get those massive orders filled when, right, like how are they going to get a bunch of people willing to sell to them when they want to, or willing to sell when they want to press buy? Through liquidity sweeps, through taking out liquidity, right? So back to the first thing that we were talking about, there's certain price points, and we'll understand where to spot them and when later, okay, in 2 days, okay, not tomorrow, but in the day after, okay, we will understand how to spot this on the chart, okay? Right now, I just want you guys to understand this, okay? So these banks, they are seeking liquidity so that they can move the market in the direction that they want to. Yes, they are the people that move the market no matter what, right? But how are they able to fill those orders? By seeking out liquidity so that they have so many people exiting the market, entering the opposite direction of them, so those orders can get filled, so they can move the market in the direction that they want to. Does that make sense? Right? And then now, why are we taking trades off of it, and why is it that important to us? Well, obviously, we want to be going in the same direction that the market is going. And who moves the market? The fucking banks. Okay, so the banks, they're moving the markets where they want it to go. What are they always doing? They're seeking liquidity so they can push market in whatever direction they want. So wouldn't it be smart for us to understand where liquidity is, and then understand once liquidity gets taken out, and then we get a confirmation, which we'll talk about in 2 days, a confirmation which we can already talk about, a break of structure. right? A confirmation of a market structure shift, right? Because we talked about that, right? When we see a break of structure, that means, okay, trends have shifted. There's a change in direction within the market, and that is the confirmation that, okay, liquidity has been swept and orders have been filled, causing the market to change direction, and that is what causes your trades to hit take profit. Not no, oh, it bounced off of a floor, not, oh, it hit its head on the ceiling. That's like a fucking story time, bro. That's like little kid shit, okay? We don't want to do that. Also, pardon me, my fucking gardeners are going crazy, so I'll try and wrap this up pretty quick. Or let me actually close this.
The Forex.com app. Use one-swipe trading to enjoy lightning-fast trading wherever you are, offering advanced trading view.
See if that works. Not really. But anyways, that's why we want to understand where that is, so we can get in at the beginning of the move, right? We understand, okay, liquidity was taken out. We see a trend shift, a trend change. It's ready to go. We know where market wants to go, right? And that's what we're trying to see. We're trying to figure out where those resting orders are. We're trying to see market push to that price point. We're trying to see then a shift in direction of market structure. And guys, if we don't see a shift in direction, if we don't see anything, perfect. Hands off. We're not doing anything, right? It's easy to say, okay, there's liquidity here, there's liquidity here, there's liquidity here. And if price gets to it, you're not immediately pressing buy. You're not immediately pressing sell, right? We need more confirmation. And again, this is why I love my strategy so much. Damn, they're ear raping. I'm sorry, guys. This is why I love my strategy so much, because we're able to take these types of trades with confidence and in fucking confluence with the market, and understanding that, okay, liquidity was taken out, and now we see a trend shift, a break of structure, a market structure shift. Like, that's confirmation that the market's gonna go. You know, like, the orders have been filled, and we see the orders getting filled, and we know the orders have been filled due to that market structure shift. Does that make sense? And do you guys understand why we want to understand where liquidity lies in the market now? Because that's where price or the market movers, the banks, are seeking. They're seeking that liquidity so they can move price in whatever direction they want. Because when it hits those prices, when they can fill their orders, that's when they can execute. And that's when we execute as well. We're not, damn, I'm really sorry. I'll wrap this up soon. We're not executing right when they execute. We gotta wait a little bit, right? Because we don't know exactly when they press that button, but we can get still a incredibly good entry, okay, by literally catching the tops and the bottoms of moves. If you notice, pretty much every single one of my trades, it's not already in a trend. It's at the top or the bottom of a trend. Okay, we catch the full move every single time, okay? Because, damn, bruh. Dude, because we're thinking the same as the market movers, okay? We're understanding that their orders have been filled, okay? Damn. And we're also understanding and knowing that, okay, their orders have been filled, we see a market structure shift, and it's ready to go, okay? So that is liquidity explained, all right? I'm going to cut this a little bit short because we got the gardeners going on. We'll go more in depth about how to spot this, how to know what price points these are at, okay? Tomorrow, or not tomorrow, in 2 days for liquidity part 2, and then we'll also talk about how to execute and how to understand even more about liquidity in part 3, okay? So with that being said, hopefully you guys took some notes from this. For your homework today, I don't have much homework for you guys for this, to be honest. This is just, dude, I'm so sorry. This is just something to learn from, okay? This is what, I just want you to watch this video 3 or 4 times, fully understand the concept of liquidity, and that's all you need, okay? I'll catch you guys tomorrow in the next video. Peace out, jit.
Another all-nighter, another missed deadline.
Okay. I already watched this video, but Oh. Um. But Hoya, hoya, hoya. Okay, basically what liquidity is.
Yo.
Now that's part 2. There's 3 parts to this. Let me find an example of liquidity. Let me try to, at least. Like I said, I'm not a professional, but kind of know what I'm doing. Well, this is kind of what liquidity is, right? It's because the bank has like filled like multiple sell orders with like micro transactions during like sell orders and buy orders, and they just filled it up, filled it up, filled it up, filled it up, filled it up. Oh, what the fuck is this? Uh-oh. You can see that's like a low here, and then it has been swept. Booyah. And liquidity sweep. Today. Got sold immediately. It's like when the bank decides to kind of like move the market the way it wants, right? So he basically just explained the basics, like he explained like the theory of liquidity. Now he's gonna like show us on a chart.
What's good? Welcome to boot camp day fucking 10, I think, right? Yeah, I think day 10. So you guys know that last day that we talked about trading, we were talking about liquidity, just kind of what it is and why we would want to use it in the market. So this is liquidity part 2, okay? And this is just going to be how to spot it in the market and where it lies within the market. And then finally, right, I want to take it like one step at a time so you guys can like have time to process and like understand what's going on. And then after all that goes down, then we will be able to get into how we can actually take trades off of it. And then if that doesn't make sense, don't worry, because we will have way more time to discuss strategy and actually executing on trades once we start learning more things. Okay, so today we're going to just talk about where it lies and then pairing that with, you know, why we want to know where it's at and also understanding it. And then from there, like it should be kind of self-explanatory as to how to take the trades, but we'll still discuss that in 2 days. So, right, let's do a quick little overview of what we talked about, why we want to use liquidity. Number one, that's where orders are going to be filled, right? That's where the banks are going to be moving the market. That's where they're going to be able to fill their orders and actually push market in whatever direction they would like to. Okay, and then again, how do they get these orders to be filled? They have to have people exiting the market, and then they also have to have people going in the opposite direction of them, right? Just like we said 2 days ago, it's an exchange. If they need to fill millions of orders, they need millions of orders to be going in the opposite direction. So that leads us into today's video, talking about where liquidity lies. So where are all those people going to be going in the opposite direction of the banks and institutions? Okay, where and who is stupid enough to do this? Where is it happening? When is it happening? All that good stuff. Okay, so let's just talk about, right, basics. Remember when we talked about trends, how do trends move? higher highs, higher lows, lower highs, lower lows. So it's safe to assume that traders, like retail traders, will see, oh, high, higher high, higher low, higher high, higher low. They see that it's trending, right? And they know that the trend is continuing when the high gets pushed above, right? Confirming that there's going to be a higher high, right? So what most retail traders do, what most retail traders will do is they see, oh, higher high, higher low. Oh, they see that the high gets pushed above. They either have buy stops, which is literally just pending orders right above the high. So, right, the price point would be like right above here. And when that gets hit, boom, order gets executed, they get filled, okay? And they're assuming that price is going to continue in that trend, okay? Now, on the contrary, there's also stop loss orders right above these highs as well, right? Because there's people that are trying to short this down move, which isn't necessarily smart, right? You want to trade with the trend, which is what the people that are buying up here are trying to do. But there's also people who are shorting within here, right? And if we know, right, same thought process, right? When people are shorting, they know that their idea will be invalidated if price pushes above this high, right? So they would be exiting the market if this price point gets hit. Okay, hopefully you're starting to understand and see what I'm trying to get at with this is that when this high gets hit, when this high gets pushed above, people are getting out of the market and people are getting into the market, which is essentially creating liquidity for the potential for these banks and institutions to fill their orders to change market direction. And you're probably saying, well, TJR, if price pushes above a high and people get stopped out and then also people are buying, that means nobody won. Exactly. They literally liquidated all of those people, and they aren't right, because right when it pushes above, people buy, right? People are buying, and then boom, gets taken out. Their stop loss is right under here, right? The people that got stopped out, they get stopped out by a couple pips, and then boom, market moves in their favor. That's why trading is so difficult, because lots of people are trading like these retail or like just these basic ways to trade. And I mean, some people are successful with it, but I genuinely think that they're successful because of their experience in the market rather than the way that they're actually trading. And that's why I really like playing off of liquidity and understanding that. So, right, we know that there are going to be stop losses above highs. We also know that there's going to be buy stops above highs. So that means, boom, when these highs get taken out in an uptrend, right, there's going to be people going long. There's also going to be stop losses above there, right? So when that happens, right, that gives the banks and hedge in these institutions the opportunity to fill their orders and then send market in whatever direction they want, which is usually to the downside. Now let's talk about it in the other direction, right, in a downtrend. It's the same thing, just vice versa, okay? When lows get taken out in a downtrend, people are going to have sell stops, right? They're going to have sell limits, sell stops down here, right? Because they know when a low gets taken out, odds are the trend will continue, okay? So, right, and we talked about during our trend session, or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend, because we are literally getting into the market. Hold up.
Did you know that Amazon has a $50 million fund that they have to pay out every month? And here's how you can get a cut of it.
I got my friends talking outside, so I gotta mute them out. But we are literally getting into the market at the beginning of a trend, and that's why we're able to catch these big moves, okay? So when we see that happening, okay, we take note of it, okay? So we know that underneath lows, there's going to be sell stops, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right, when that low gets taken out, okay, in a downtrend, people are getting liquidated. People are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidation and then allows market to fill those orders. Okay, so let's go into the chart and actually show examples of this now. And it's very, very easy. Literally jumps off the page. Look. Okay, uptrend. What's this? High, boom, sweep, downtrend. Okay, we're not gonna get too analytical with it. And guys, this happens on every single time frame. Okay, right? Uptrend. Sweep of the highs, collapse. Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off. What's this right here? We have highs right here. Boom, market pushes up, big sell off. Dude, so easy, man. It's very, very easy. And it's like you're going to be able to see this on every single time frame. So that's also what your homework's going to be, is literally just finding these situations where a high or low, a high or a low in whatever trend it's in, gets taken out, and then price rallies. Look, okay, ready? Want to see something crazy? Look at this, low, low. You're probably saying, oh, no, it's just going down. Wait a second, go to the monthly. Sweep. Liquidity got taken out. If we go to the yearly time frame, that is a massive liquidity sweep, right? What's market probably going to do? Probably going to reverse. And that also coincides with the US dollar being extremely weak right now. It's actually amazing how these markets move and how these markets work. Ready? And again, I don't want to get too deep into strategy, but this doesn't only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like find where market opens, or let's actually do it on like GU. Let's find let's find like, boom. Okay, this is Asian session. Okay, I don't want to get too deep into this because this is again, we just want to talk about liquidity and be able to spot it within the market. But as we there's going to be sell stops, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right when that low gets taken out, okay, in a downtrend, people are getting liquidated. People are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidation and then allows market to fill those orders. Okay, so let's go into the chart and actually show examples of this now. And it's very, very easy. Literally jumps off the page. Look. Okay, uptrend. What's this? High, boom, sweep, downtrend. Okay, we're not gonna get too analytical with it. And guys, this happens on every.
I think it's like what I said like earlier, I think. Was it this one? Yeah, it was this one. I think. Because this was a new low. All right. Am I not wrong? Is that a low? Liquidity sweep. Let's find another one.
Single time frame. Okay, right? Uptrend, sweep of the highs, collapse. Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom, push up, takes out liquidity, big sell off.
Yeah, this is a lot better. Because in futures, it's like there's zero gaps. There's zero like value gaps. Fair value gaps, sorry. This is like, can I not get Oh yes. This is exactly what I wanted. Okay. How can I flag this? Where's the flag? Where is the flag? Because like that, it's a lot easier. There's no fair value gaps like anywhere. It's a lot more. Alright, anyways, we're gonna stay on this chart. we are just constantly in an uptrend. Here. Wait, am I on gold or yeah. Okay, let's find a. It's like we're constantly going up. Oh, fine. Oh, well, I think that's a great example here. Oh, never mind. And yeah, no, it's in the heart of the candle. Well, it's in the body of the candle. It doesn't work. Because now we're on a daily time chart, so let's go on like 15 minutes. Okay.
What's this right here? We have highs right here. Boom. Market pushes up. Big sell off. Dude, it's so easy, man. It's very, very easy. And it's you're going to be able to see this on every single time frame. So that's also what your homework's going to be. Is literally just finding these situations where a high or low, a high or a low in whatever trend it's in, gets taken out, and then price rallies. Look, okay, ready? Want to see something crazy? Look at this, low, low. You're probably saying, oh no, it's just going down. Wait a second, go to the monthly. Sweep. Liquidity got taken out. If we go to the yearly time frame, that is a massive liquidity sweep, right? What's market probably going to do? Probably going to reverse. And that also coincides with the
Okay, so it can also be in the body. Does that count? Does that count as a... Maybe I'm just fucking stupid. Because right now, well, it's like consolidating, then it decides to go down. Well, that kind of is the case, no? Like here. Sweep. No. Doesn't work like that. Oh, well, kind of like here. Boom. Right? If we go to the, can we go to the yearly time frame? Oh. All right. Let's go to this.
US dollar being extremely weak right now. It's actually amazing how these markets move and how these markets work. Ready? And again, I don't want to get too deep into strategy, but this doesn't only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like find where market opens, or let's actually do it on like GU. Let's find
Vention rend l'automatisation industrielle accessible à tous les fabricants. Concevez des équipements automatisés dans votre navigation.
Let's find like, boom. Okay, this is Asian session. Okay, I don't want to get too deep into this because this is again, we just want to talk about liquidity and be able to spot it within the market. But as we can see, right, we have a mini downtrend, right? We break structure to the downside, take out these lows, rally, we break structure back to the upside, price pushes higher. Okay. Like it, like we could find this type of shit on the 15-minute as well. Okay, and when you guys get good at it, when you guys get good at like spotting this, it should be like super easy to see and understand where this happens, right? It should just jump off the page. Boom, sweep, fall. Boom, sweep, fall. Let's try and find some to the upside. And the reason why I love this is literally, boom, sweep, rally. Dude, like when you guys start to see this stuff, like it literally jumps off the page. Sweep, rally, and then what does it do to the upside? Sweep, fall. It's how the market.
Right. Let's go to futures. Okay. So horizontal line, sweep, rally, and then a new high gets pushed here. You can kind of see like the small tick, and then it falls. But then yet again, high here gets pushed down, then it rallies. New high right here, get pushed above. There's a new got pushed above. Even this one. So technically well, technically off of what I saw, because it's literally like super obvious in every aspect that it happens, it kind of just like here sweeps, rally, here sweep, rally. Can I not like zoom out? 45 minutes. Yeah. Well, now I'm gonna look at it like earlier. What are we on? Is S&P 500 futures. So now price action should fall. But then if on the contrary price action pushes, well, whoops, sweeps off of this low, is gonna rally again. Okay, so I kind of understand now.
It moves, you guys. The market is unable to actually move in the direction that it wants to without taking out liquidity to fill the orders. Okay, this is why I love the way that I trade, because it literally makes sense. You are not playing off of a floor getting bounced off of, or it's touching the ceiling so it's going to go down. No, we're actually understanding why the market is moving and when it wants to move in whatever direction. Like, this is literally going to be your homework. I don't really have much else to say on this video besides open up your chart and literally just go on. Okay, yeah, sure. Well, we can literally just call it right here. Open up your chart. This is going to be your homework. Okay, open up your chart. Go on 3 different time frames and find 5 different liquidity sweeps on 3 different time frames. Okay, that's all you need to do. Okay, do it on whatever time frames you want. Daily, 4 hour, 1 hour, 1 minute, 5 minute, 15 minute, because you will see these happen time in and time out, bro. Like, look. Sweep, push. It's not accidental, and it's funny because like you could say like, oh, like you're just cherry picking. Like it's all over, bro. Trust me, when you guys do your homework, you will see that this shit is everywhere. Like it's very, very apparent, and it's super, super easy to see. You can even put it on the weekly, bro.
In less than 24 hours, you will have $1,000 in your account, and then $1,000 daily for the rest of your life, all with just 5 minutes of your time each day. This might
fall. What happened right here? What happened right here on the monthly time frame? Oh, there's a monthly low, sweep. What happened? Break of structure to the upside on the weekly, rally. It's not accidental, and it happens on every single fucking time frame. And guess what? Guess where we're at right now? On the monthly time frame, at a big high. This candle is yet to close. Okay, this candle is yet to close. It has 28 more days. My guess? Oh yeah. Oh yeah. We got some liquidity. And just having some knowledge about the US market and the US economy in general, I wouldn't be surprised if we do whoop, just down into the fucking pits. Okay, so with that being said, now we know how to spot liquidity. We understand what it is, and then in 2 days we'll get into how we can like take a trade. Okay, I don't want you guys to be like, I know liquidity, I'm gonna take trades, because it's not just liquidity. You need to know a lot more than just liquidity and break of structure to be able to form an actual bias and be able to take a actual high probability trade. But this is going to get you guys to the point where you guys can start spotting this on the chart. And there's a reason why we introduced this concept first, because it's the hardest one to grasp, and okay, and it's the hardest one to grasp, but it's the most useful one to understand. Okay, so once you can understand liquidity in the market, it's wraps, bro. It is literally wraps. It is wraps. Okay, so with that being said, your homework: choose 3 different time frames, find 5 examples on 3 different time frames. Okay, choose whatever pair you want, right? It can be gold, GJ, GU, S&P, doesn't matter. You will find liquidity sweeps no matter what. No matter what, I guarantee you, without a doubt in my mind. And if you can't, you're doing something wrong, because this isn't even like a come back to me and let me know if you can't. It's like you are literally doing something wrong if you can't spot this, because this is how I make money. This is how thousands of other traders make money, right? This is how ICT literally came up with this shit. Like it works, and it is in the market, and it's how the market fucking moves. It's like it is how the market moves, and I don't care what you say.
Okay. Well, I actually just took down a few examples now. Okay, so I understand the liquidity sweep. Yeah, like this, boom, sweep, rally. Sweep, rally. Can't put down the crap. Can't put down the crap. Sweep, rally. Sweep, ball. Okay, so it's very easy. Very, very, very easy to understand liquidity. Liquidity. C'est les liquidités. Okay, so now we're at part 3. Then we're gonna get into fair value gaps. Risk management. Maybe this one's important. I don't know. Liquidity, c'est les liquidity. Bon, I'm gonna wrap this up quickly today because I have work and I have to go to work. Fun fact, my license got revoked because I didn't pay it. Oh no, it's not funny. It's just because they just sent me the email. No, they didn't even send me an email. Everything's digital today. I think we can all agree. They sent me this in my mailbox. I don't go to my mailbox. I never could do. I never go to this fucking mailbox. And then after like New Year's and Christmas, randomly I just got this mail. And it was sent, I think on the 20th. And the date I was supposed to pay it was the 31st. But like, what the fuck, are you all fucking dumb? It's like, I'm pretty sure that, like, from the 20th, even the 19th to the 31st, everyone's in fucking vacation. Nobody fucking cares about their mail, bro. It's like, you can't even send me an email. Just send me an email. Email. Fuck! It's not complicated. It's not complicated. It's like, ugh. Let's go watch the news before I go. It's not funny, guys. This is not funny at all. Nothing too important. Oh shit. Trump unbanned TikTok. Wow! Oh, this is why this morning I was like, Andrew Tate posted on his Twitter saying he was back on TikTok. Nobody cares. XRP. You guys want to know something very interesting about XRP is that nobody fucking believes in it. Neither do I. But it is... Let's go watch the charts. It is currently at... It is currently at Camp it down the cup, camp it down the cup, camp it down the cup. I don't need the market cap. I just want to see. It was at, wasn't it like almost $5? Wait. Is my account on? Okay, no. Not on. Okay, we're good. Whoa. I bought XRP at, I think, 0.8. And now it is at... It is almost at $5. Which is insane. I think it was at $5, and I bought it at like what? I think I bought it. What year is this? 2017, 2020. I bought it this year, and it was like right there, I think. Then boom, which is insane. I bought it like exactly at, I think, 0.8, and I made like, I think, $200 off of just a single crypto, which is insane. I know like a lot of people like put it much more into this, and they're so happy right now. It's like, oh my god. Like, who cares, bro? Shut up. Anyways, I'm gonna wrap this up. Quick little stream today. I gotta go work. And I gotta go call my insurance. Tell them I'm okay. I'm not dead. I was just on vacation. Oh. Bye bye, amigo. Where's my cat? Wait. I gotta end the street with my pussy. Alright, never mind. She's in her favorite hiding spot. And there's no fucking way I can get to her, so. Yo. Bye, amigo!